Hey, what's up, everybody? So everybody wants to know, is this a bull market? And then people look at me and say, bull market? It's one day and we're up like 1%. What are you talking about, bull market? And then can the bull market continue? So who's asking these questions? They're rhetorical questions. I'm telling you that there is a chance we could be entering into a bull market, and I will explain why. But the first thing you have to understand is we have PPI numbers coming out tomorrow and CPI numbers coming out on Thursday morning. They're interrelated. They're like cousins. PPI is how much you spend on goods and services. CPI, very similar. It's the price of inflation as things go up. So they kind of run together. So whatever kind of number you're going to see tomorrow, say it's down 0.1%, just from what the estimate is. And don't ask me what the estimate is because there are so many things. But if you're watching the news, they're going to tell you that it was either hot, which means it came in over the estimate, or cool, which means it came down under the estimate. If it comes in under the estimate, okay, means the Fed's doing what they're doing correctly, means the markets could run. All right, I'm going to get to the number on where the SPY could run to. And when I say the SPY could run, I mean your other stocks can run. But first, I'm going to explain exactly what we're seeing today. Okay, started last week on Monday and Tuesday. It was the first day of the fourth quarter. Important because big money, institutional money, reorganizes their books. The same way they were selling the Wednesday, Thursday, Friday before, the first quarter, the first day, the second day, they start entering positions. Now, they don't jump into them all at once. The fact that we declined in the market over like the last week was great because they're like, okay, the same position. I bought a firm at $19. Guess what? I bought it at $18.75 today. Yes, it's up to like $19.47 now. So understand, stocks come down, and the same people that were buying the stocks are Disney or whatever your stocks are. If you saw what happened to Rivian the other day, right? Rivian got hit, recalls. They say it's going to take a month to fix it. There were no accidents. I'm listening to analysts talk about Rivian, and they're saying it's not that bad. It could have been a lot worse. Could have been lawsuits, could have been accidents. So what are they buying up? Rivian, great long-term investments. Say you like options like I do. How would you invest in Rivian? You'd say, okay, well, let me go out a whole leap year. Let me go out to a leap year call. Let me choose $40 for Rivian because it's currently at $33. So it's definitely out of the money. I'm going out over a year, and I'm probably going to pay $2, $3. Now, what happens? Rivian goes to $60 by December of next year. Okay, $60. You paid $3 at $43 is your strike, your break even. So you're going to make like $1,700 per every 300 invested. Something like that. I'm just trying to identify strategy because so many people try and trade this market and they have no strategy whatsoever. Now, if you have a strategy, tell me below. You can make comments. Tell me on the side that you can make comments. Tell me what your strategy is. Point is, so many people don't have a gosh darn strategy. They're like, oh, market's going up. Is that a good thing? I'm going to jump in calls at open. I'm going to jump in puts at open. Now, you see it on the message boards. Okay, I joined the message boards because I would tell you not to buy it open. Shoot, I would tell you not to buy it at like 10:30 a.m. when the spread's narrow. Okay, so why did I come out? We'll talk about my three trades, my three live trades that I crushed it on, which I talk about live every day here. They're only trades I talk about live here. I'll mention them on Discord. But first, Jamie Dimon, right, the CEO of JP Morgan Chase, comes out yesterday and he's like, the markets could drop another 20%. Okay, we all heard it, right? You heard it, I heard it. What happened the last time Jamie Dimon came on and spoke? He said there was a storm that was brewing. That was the beginning of June. What did we do in June? We shot up in a bullish market for 2 straight weeks. What did Jamie Dimon do yesterday? He spoke about how we could go down 20%. What's likely? Honestly, likely is based on CPI, PPI. If they come in flat or even down 0.1%, the markets are going higher. I'm going to give you the specific number on the SPY in a minute. Okay, if they come in hot, you hear the word hot, it went up, we're still going up, inflation's rising, PPI is rising. Bad thing for the markets. It means the Fed's not doing their job. The Fed will have to continue to raise rates strongly, 75 basis points in November. Okay, that will push down the market. You see the US dollar going up. That's a bad thing for the market. So here's what you're watching, or what I watch for in the morning or even during the day. I'll just go to my phone. I go to Google here. I will go to the charts that I've opened. First, the 10-year, okay? I see what the 10-year is doing. Okay, it's sort of forming a W. Looks like it'll go up. So I don't think the markets are going to continue to go insane. That's why we've seen the SPY peak at around 362. Again, at 114, I mentioned to Discord I was going to sell my position. So here we are. Again, I have the 3 minute up. So 114 is right about here. So yeah, that's where I kind of sold my positions. Now you can see volumes kind of light. So I don't see any massive change. Go to the 1 minute. It's still kind of even. We're still going to hover there. Now what's likely, again, so now we have to talk about strategy and psychology. What is likely to happen is, since today was a green day and it was the first green day in a while, what's likely to happen is before the market closes, before PPI numbers come out tomorrow morning, the market's probably going to contract a little. So if you ask me, Matt, what's your guess right now at 205? Where's the market going to finish at? It's sitting at, the SPY sitting at 362.02 now. I would say probably like 361.52, something like that. I don't think it's going much higher. Again, I mentioned the ceiling or resistance, which would be at 362, 363. So even if we go to 363, we're immediately going to come right back to 362. So if you see the market spike up 363, I think we're coming back to 362. So understand the support and the resistance level. I talk about them every morning. I'll mention them right now because I'm going to mention bull case scenario and bear case scenario. Understand what could potentially happen. But first, my live trades that I mentioned Jamie Dimon. I mentioned institutional buying started last Monday and Tuesday, the first and second day of the new quarter, right? Dow was up 700 points, then 800 points, started the next day down 400, went back to even before finishing red. Big tech is off their highs, 35 to 40%. There are institutions, hedge funds that must invest all the time. So where you and I could be like, we're going to buy a put, we think the market's going down, they always have to buy strong positions. They always have to buy bullish positions. They're buying stock. Stock's what moves the markets. When we play options, it's us gambling on whether we think we're going to be correct or incorrect. Okay, so we'll focus on the SPY right now. Laser focused, okay? SPY sitting at 362. Not a surprise. Actually, a little under because I happen to think 362 is going to act as a ceiling. Now, if we had multiple green days, then we would break through this number because a lot of people are bullish the market. Now, I'll explain that real quick. Okay, analysts on Wall Street saw what the market did over the last week and a half. Some stocks just literally lost 20%, and they're like, okay, we've bottomed. We found support at 357. We found support at 359. Again, we're not far off support. We're only up 1% from 357. And the low actually yesterday was 355, maybe 85, or was that this morning? Let me check because these days run together. But check out the 2 year, the 10 year. Was it this morning? It was this morning. 355.82 this morning. Okay, so let me just explain. PPI numbers come in hot. We'll do the bear case scenario. Oh, they're so ugly. Oh, inflation's going up. Oh my God, the cost of my service. I got my tires changed. I got a oil cleaning. I hired a cleaning service. PPI, the cost of goods and services. If it happens to go up and you're like, oh shit, it's more expensive, right? Then you're going to see the market in the SPY drop. And then it will be confirmed Thursday because CPI numbers will likely pop as well, all right? Now, I'm not saying that's going to happen. I'm explaining the bear case scenario, okay? People like to take a little excerpt and they're like, this dude said it was going down here. It's up here. He's crazy, all right? So here it is. Bear case scenario. The numbers are hot tomorrow, likely continue hot on Thursday. You're going to see half the action tomorrow, half on Friday. It makes very logical sense. So if we're sitting at SPY at 361, or let's just say 360, because that's where I think we're going to finish. I already made my comment. Let's just say 360, 361. It drops. You're going to see it break through the following levels. Again, bear case, write these numbers down because as you break past a level of support, you're going to go touch the next level of support down. So when you're like, oh, it's going to turn right here. Again, bear case scenario. All right, on the way down. So we're at like 361 in the morning pre-market, and all of a sudden the numbers came in hot, bear case scenario. You're going to see 357. When it cracks 357, you're going to see 354. Now, we haven't seen that yet. So understand psychology. If we see 354, we're probably going to see 350. And then you have the numbers the next day, the next morning pre-market. If those are hot, you're going to go from 350 to like 342. That's a bear case scenario. Let me give you the good news, the good best case, bull case scenario, right? These are the institutions, the same people buying last week said, okay, we've seen the bottom. Jamie Dimon says, okay, 20% downside. Everybody else says markets bull run just like June. okay? And then what happens is the numbers come in cool tomorrow. They miss by, or the estimates come down by 0.1%. That's all it takes, 0.1%. Well, the SPY is going to shoot up next level higher, 364.50. When it breaks that, it's going to have a little contention at 367. When it breaks that, 370 is in play, okay? Now, when CPI numbers come out the following day on Thursday, say they follow PPI, and they're down 0.1% from estimate, just 0.1%. The SPY is going to trickle 372, 375, 378 on the high side before it might have some resistance. So yes, we're sitting at 361 flat. I'm mentioning 378, 17 points, 5%. Again, it's a gamble. I currently have no positions. I sold all my positions at 1:14 p.m. when the SPY was sitting at close to 362, a little over, and I saw some resistance. I don't want to ride the elevator. Let's talk about the three positions I've mentioned only on the live stream, right? The first one was the SPY call. I mentioned it yesterday, right as I was signing off. I'm like, okay, the SPY was sitting at a 361 right now, and I was like, if it can go down to 360, it can touch 360 even. If it does that, I'm buying a call. What happened? It went and touched 359, and I was like, oh, there it is, there it is. I told people, and there did that what I said, and now it's back up. So yeah, I sold that one. I took 60%, okay? The next one was Affirm, okay? I mentioned the $20 calls. They were out of the money yesterday. I bought them at $36. They went up to like 44. I told my Discord, they'll be back down at 36. They always come back down. So when I mention something, wait for it to come back down to the level you actually want to buy. All right, it's no secret. When something's $20 and you're like, I'll pay $20, and you don't get the order and it goes up to $30, wait for it to come back down to $20. Okay, don't chase it at 30. Then when it's back at 20, you're down 50%, and you say to yourself, man, I could have bought it at $20. Put in your buy exactly what you want to purchase it at. If you want to buy an option for $120 and it's currently $160, you want to pay $120 because you think that stock could go down to that price, not because you only have $120 left in your account. That's a terrible way to trade. If you look at your opening balance, you're like, okay, I have $38. I'm going to trade, find an option for $38. No, find the option first and then say, if it comes down, like right now, I might take a bullish stance on the SPY because it's coming down to 360 and change. And I was like, 361 was too frothy, 362 was too frothy. I do think it can come down to 359 before spiking up. So that will be an interesting position I'm looking at. Okay, that was the first one. Affirm was the second one, or maybe that was the one I was mentioning. Affirm. So the Affirm contracts in at $36. This morning they were at 19. So anybody that watched the live stream and said, I want this dude's position, but he's a fool, I'm gonna pay a fraction of what he paid. I paid $36. I was shouting it from the rooftop, 36 bucks. It went down to 19 bucks after the open this morning. Somebody bought the same or sold the same contracts for $19. Those are the same contracts that were worth $90, okay? In at 36, sold at 88, okay? Some of people probably bought at $20 and $19 this morning and sold at $90. That's 400%, okay? So I'm not saying my entry is spot on, but I'm telling you, if you can call the bottom or get the best entry, you can have a great return. So those are the Affirm calls. Now, I'll tell you, I like the Affirm calls because even though I don't like the stock, there has been some inflow into that stock, and it's been extremely beaten up. So that is an example. You have another company like Roblox, not a play I'm recommending, but so many people on Wall Street hate them that might be one that'll struggle, right? They're in the same kind of, gaming. One's fintech, one's gaming, but they run with the same crowd. They're not profitable, okay? So for Affirm, I would rather be in an Affirm position, which has some positivity, rather than a Roblox, which would be a little negative, okay? So that's just a strategy as well. Say you're in like two gaming companies, Las Vegas Sands and Wynn Casino. I would rather be in Wynn Casino. Why? More diversity. They're in Las Vegas. They're in Massachusetts. Yes, they're in Macau. But if you take somebody like Las Vegas Sands, even though their name says Las Vegas, their main money comes from Macau. So if China does lockdowns, Las Vegas, they both will get hurt, but Las Vegas Sands should fall further than Wynn Casino, okay? What else was I in? GDX, right? Gold. Because as the US dollar comes down, which I thought would happen, no matter if the markets were red or green or red, the US dollar comes down, right? Gold usually goes up. So I looked at the chart of gold, and I've seen inflow into GDX, which is the ETF, for a few days now. So I said, next time gold gets beat up, and that happened yesterday. It went from $25.50 a few days ago to $24 yesterday. Okay. At $24.04, I'm like, that's a perfect time to buy $24 calls. I'm paying $64. I think it'll be $25 before Friday, if not more. Okay. So that's my strategy. Got it? $24 calls. If the ETF is $25.50, that makes each of my calls worth $150. If I'm paying $64 on average, I'm looking for over 100% return. Complete strategy. I know my entry, know how many I'm buying, know what I'm paying, know my time or expiration till Friday, know what I'm expecting on that one. I'm expecting $25.50. Now strategies change. I already sold today for profit. Why? Because I bought in and I was holding about 44 contracts by the time I was done buying. I bought some more this morning. I bought some more this morning because those contracts from $64 were as low as $43 this morning after open. GDX was under $24, and those contracts were $43, $45, $48. I bought some more at $58. I couldn't even call the bottom. That's how bad I was. Point is, it was a better entry than my majority position yesterday. So what did I do? When it went up to $88, $90 per contract, and I'm in at $64, I'm making about 40, 45%. Shoot, that's pretty good for me. I mean, I had a bunch of contracts. I had like $2,500 worth. For me, I don't look to kill it anymore. I used to have positions that were like 65,000. I had at one time a $250,000 position on earnings, and that didn't go well for me. So please, if you have questions, put on the side. But let's talk about the SPY, good and the bad. Again, just to recap, what you're seeing right now, SPY is going from 362 back to the 360 level, which I mentioned we could still see 359. Everything is going to be dependent, okay? Everything's going to be dependent on PPI numbers tomorrow morning. Don't even think about CPI. It's all on PPI. It comes in at 8:30 and they say, as expected, you'll see a little turbulence, okay? If they come in hot, all of a sudden, if futures are just the slightest green, 100 points, 200 points, you'll see them drop red. Oh, it'll get ugly. And you'll think, maybe I'll get a bounce. But if the number comes in hot, there is not going to be a bounce, in my opinion. All right? If the number comes in cool, then you're going to see a strong market because there's a ton of money that came in last week. There's a ton of money on the sidelines. They're just waiting to buy. Okay, so let me just see if we have any questions here, and we'll get to it. Hey, good call, Matt. Wrote it up to 363, then you got puts. Ouch, nailed it, man. I didn't even know it was that high. Thoughts on AMD? Yeah, let's take a look at AMD. Oh, yeah, SPYs, yeah. Woo. Oh, yeah, hit 363. So, yeah, I mean, that's a heck of a call, man. Yeah, 363, which I was telling people was the top. 363. There it is. It'll come right back to 362 pretty quickly. I guess that's what it did. Now it's coming back between 360 and 361. It's 360.82. Again, it could potentially touch 360. I think it will find support there. So if you're looking to get in a position, you're watching calls going into tomorrow. First of all, don't go crazy because tomorrow could be a nuts day. But say you just want a piece of the action. You want to buy one SPY call or two SPY calls. You make sure they expire on Friday. Wait for the SPY to give back 70 cents. Wait for it to come near 360. That way your calls are probably 20 or 30% less expensive than if you bought them right now, okay? Vice versa. If you're looking to buy puts, you don't want to chase it. If the SPY was sitting at 363 and now it's at 360.69, so a whole $2.40 lower, you don't want to buy puts right now. You say to yourself, I've got the strategy. The strategy is SPY puts at 363 or 362 and change because it'll probably reject that level. Then you hope to be correct tomorrow. Okay, so you hope the market goes down tomorrow. But you're saying, okay, I'll buy them here. You'll save it. Okay, hey, you were bearish after 363 yesterday. You're killing it on news today. Dude, that's awesome. So I did see somebody ask about AMD. I'm going to pull up AMD on the chart here. So AMD is very interesting because AMD came out before earnings. And they said, let me just make sure I have it right here. There it is, right? Nope. All right, well, give me a second to find AMD. I thought I probably have it on my list already. I wish I knew where it was. Let's see if I can add it to my watch list. AMD and add. Okay. Exit. There we go. Perfect. All right. So AMD came out with news the other day before earnings. Earnings aren't due out for 3 weeks, okay? They always screw people, all right? AMD has screwed me many times. I can tell you many stories when they drop news when they're not supposed to. Earnings are scheduled for Tuesday afternoon. Once they drop news pre-market Tuesday when I was holding an over-levered position that I was looking for the run-up into earnings, okay? But AMD came out and they said they're going to have $1 billion less revenue, so the stock got beat up. The stock was trading at like, what, $78 not too long ago. Now it's at $58. I pull it on the screen completely. It's at 58.05 right now. We've got to go back and pull up maybe like an hourly chart to see a full view. Again, it was close to the $80 range. Here's where they came out and they said revenues were going to miss. It was in the $68 range. It dropped the next day, and you don't think it's done. When something drops off bad news like that, it takes multiple days to iron out. So you saw a complete day of selling on Friday before, of course, Monday, the start of the new fourth quarter for all these institutions, they started buying it at 56.72 all the way down to 55. So yeah, I would be a fan of AMD at this level completely. I would do the same thing. I would go out, say you're not heavily into options. I would go out and say, okay, let me go out till January, okay? There's going to be a run in the market, bullish run before January. AMD is pretty beaten up. It was as low as $55. I'll enter at 58 flat. 58 flat is like 5% from the low. Okay, that's not bad. Let's say AMD gets beaten up. I've heard institutions talking about they wanted to own it at $60. So let's say it goes to $50, okay? First off, your option isn't the worst thing in the world because hopefully, you bought one contract, two contracts. Point is, the downside's limited to AMD. That's what I feel about the whole market right now. Downside is limited. Upside pop could be, it's also limited. But I think the SPY could jump back to, let's talk about where we were Tuesday and Wednesday of last week. SPY, 378. SPY, 379, okay? You could look at your individual stocks. Let's look at AMD and see where it was the middle of last week, okay? So let's go right about here. $68, okay? So AMD was $68 in the middle of last week. It's $58 right now. You're talking about a 20% haircut. I really can't show you because I don't have much hair here. But you understand, it took a massive haircut. You want to look at Tesla? Oh, well, the XLE hit 83 again. Okay, so here's the thoughts on the XLE. XLE is the energy ETF, okay? We have earnings coming up. Earnings coming up for quarter three. Shoot, they're probably earnings out today, tomorrow, the next day, going forward 3 weeks, okay? Energy companies, all their earnings estimates are up 96%. So if you were going to earn $10 a share for your people, your earnings now, the estimate's at $19 and like $56 a share. And you're still going to beat. So yes, energy companies through the roof. Bad news, Ukraine, Russia, energy costs through the roof. Cold weather, energy costs through the roof. So yes, XLE, just like G Gold right now, GDX, those two ETFs, even in a tough market, and you've seen the XLE, again, I'll pull it up because I don't want to tell people to buy XLE depending on what price it is right now. But I'll tell you, at $74, at $77, it was a steal. So I think I have it someplace here. I wish it just pulled up real easy. I'm not that technical. XLE. Well, I can't find XLE, but I did find Tesla, and I saw someone ask about Tesla. So we'll talk about XLE first. Let me just look at it on my phone because I don't want to give you guys misinformation again. XLE, energy ETF. Okay, yeah, it looks like great right now. It just dipped. It dipped to $80.23. So yeah, I would buy it up to like probably $85, $86, meaning you can probably get an 8% move this week. That's if the markets rebound. They're selling it today. They were buying it the last 2 days. Inflow, let me just see. Yeah, I mean, they've been buying it since 70. It peaked at 84. It looks like it's coming down. But again, okay, here's the tough thing about XLE. It does have some gaps to fill. But again, if the market stabilizes and is strong tomorrow, XLE will be off the chain higher. So that's what someone you take a chance on, because if it fills the gap and energy drops, it would have to fill the gap to like 72. So you're talking about it's at 80 right now, $80.23 now, 30 cents. Yeah, I mean, You could take a chance. I would take a chance. I'm looking at the chart. I'm looking at the daily chart. It could easily spike back to $85 if the markets flatten out or straighten up or turn green over the next couple days. So yeah, I mean, just understand your risk anytime you go into something. All right, so let's look at Tesla. Let me pull it up for everybody to see instead of my face. Beautiful. All right, let me find Tesla. Here it is, sitting at 219. Oh my God. Remember all those people? Oh my God, that we're talking about Tesla. Good thing we're looking at the hourly, okay? So we know Tesla was in the 285 range. Now understand this first. Analysts are coming out and they're saying price target 350, price target 320, price target 280, whatever it is, it's still 25 to 40 to 100% greater than we are. We have a gap to fill. We have a gap to fill to 255 on the low end, and the gap is at 265, right? You guys can see that perfect. So yes, let's give you a bull case scenario. A bull case scenario is the markets react positively to CPI and PPI numbers, PPI tomorrow, CPI on Thursday, and Tesla will likely be at $275 by Friday. That's a bull case scenario, okay? The bear case scenario is the markets don't like it. It looks tough. Inflation's still going through the roof. Prices are going up. PPI and then CPI go up. Tesla on the downside. I didn't do the downside. I only gave you the upside. 275 on the upside. The downside, I got to go to a wider gap just to get an idea about where the drop could be. So it literally could drop about 35 points from where it is now. So let's just do 35 points from 220. So 35 points from 220 would be 185, okay? 185. Now, people might say, bear market Tesla, no way, 185. Here's the thing about Tesla, and I made a video about this probably 4 or 5 months ago when I used to do this full-length videos, and I said Tesla's forward PE was $62. And then when I dropped the video, the forward PE was $73, and the price of Tesla, I think, was like $380. I'm just going to see if I can find what the forward PE is right now. I've got to hope it's under 50. It's at 53 still. So yeah, there's more downside. If the market reacts positively, Tesla has a great bull case scenario. I retract my 275 prediction, and I say Tesla could go to 260 by the end of the week. Bull case scenario. Bear case scenario, which I hope doesn't happen because a lot of people are losing their life savings. A lot of people in 401ks. But Tesla on the downside, you could see 185 if the markets just capitulate. I mean, you're talking about the SPY level, and I said the downside could potentially be like 340, 342, 346 if the markets hate what they hear the rest of the week. And keep in mind, we have more stuff. Wednesday afternoon, we have Fed minutes from the previous meeting. Thursday is CPI number. Friday is retail sales. First thing. You also have jobs numbers on Thursday, and then consumer sentiment as well on Friday. So if each day it gets ripped lower, you'd probably see 2%, 2%, 2%, another 6% off the SPY. SPY is sitting at, what would we say, 360 around. So you're talking about, probably like 347. And then we know it always exaggerates. Retail traders always get in and out late. So yeah, let's see. Job market strong, spending is hot. Does earnings season expect to be good? So yeah, earnings season. So we started talking about that right now. Energy companies are the only companies that have earnings expectations up 96% year over year. Okay. Tech companies have it up 6%, 5 to 6%. Now, here's the thing. AMD is estimating 5 to 6% growth. Now, if AMD comes out and they say, instead of 5 to 6% growth, we're going to have no growth, or we're going to be red a little in the growth area, then other companies will join on. If multiple companies say that, then yes, you're going to see SPY at 340. If earnings do okay, PPI, CPI come in range or even a little cooler, the Fed is doing their job, you'll start hearing 50 basis points in November, not 75 anymore, okay? So if you start hearing that, bullish for the market. If you hear 75 or worse, 100 basis points, bearish for the market. As far as Tesla, bear side, 185, bull side, 260. I appreciate everybody staying with me today. Hopefully these are getting better. I'm trying to give you guys more insightful